back to Primary Source China Investment. This week we're on show C7, and we're looking for some green shoots in China. Pengwo and I try to stay objective here, and that requires equal measure of skepticism and optimism to stay immune from the opinion generators. And I want to look at one chart this week that summarizes this very succinctly. Anyone looking at this chart would conclude that the US is importing less from China, about 20% less than before the pandemic. Is there some substitution effect with Chinese manufacturers moving to third countries? Sure, but don't be fooled. The days of constantly growing imports from all sorts of items, big and small, is over. Similarly, while the US is exporting more to China than before the pandemic, the chart doesn't look strong. And I would suspect that the most recent decreases continue. Pengwo, what's your thoughts about this? I know there's a lot of discussion about, well, if you're buying from Thailand, it's really China because they're China manufacturers.
Yeah, I think the reality is that really forced China to go out of the country and rebuild the supply chain globally rather than from China directly. So they went to the South Asia and build the factory, and they go to the Mexico and to build the factory, export to the United States. It looks like much more complicated and difficult than the United States thought.
Yeah,
And most importantly, and that is, we should not do the investment. We always go to the assumption, right? Most of fundamental things. Why should we decouple from the China? What's the purpose on that? Just part of the China reduce non-export amount, or is really get some benefit for the United States? So I think after it's almost 8 years for the trade war, after we revisited this, is everything is quite clear. Is that it really works, and the United States really get the benefits, or maybe like the sooner or later after the couple of years, everything back to the again, and then most people just waste their time during the process.
yeah, there's a couple of moving factors here because the US is doing some stuff and China is doing some stuff as well. So this doesn't happen in a vacuum. And if you talk about investment, there's no polite way to say this. Investment in China is dying. The US invests more into the UAE than China now. So US investment, greenfield projects are really, really shrinking. So many years ago, when I was trying to raise money for my investment advisory startup in Shanghai, I was told by a large US asset manager their feelings about China. And they summarized it this way: it's too difficult, and there are similarly sized opportunities elsewhere. This is an important aspect because just today, it was released that the entire asset management industry, the fund management industry, not the private guys, the fund management industry is 4.3 trillion US dollar, which sounds like a huge number until you realize BlackRock manages more than double that. So BlackRock is about 10 trillion, which is more than double the entire asset management business in China. It's a shocking, shocking number. Much of what we're talking about, Pengwo, is this policy related. And sure, we can pinpoint it as of March 22nd, 2018, when the so-called Trump tariffs were added. But the Biden administration not only kept these in place, he's extended them. And we can call it a trade war, but nobody's calling it that anymore. It's just the reality. Whether it's good or bad, it just is. So companies have to, and investment people have to deal with the reality, right?
That's true. I think from an asset management perspective, U.S. stock market get a much less impact for the China economy compared with United States. And obviously, as long as the U.S. raise the interest rate and the global economy go to the recession, and I think the world economy still get a huge impact by the Federal's interest rate.
Yeah.
And then that's caused the reality is entire the asset management business in China get shrink significantly. I think
Yeah,
even worse than BlackRock did it before.
and regulators are cutting fees. So anyway, we don't need to talk about that business, but just overall in general, China is also changing. U.S. put in these trade tariffs and all sorts of things, try to decrease trade with China. It's definitely working. I don't know if it's good, bad. It just is. But also Xi Jinping's vision, the factory of the future, the building it and they will come. High quality development, new quality productive forces, all of these kind of terminology, which really means high tech innovation. The old economy of polluting industries, infrastructure investment, real estate speculation, which helped lift China's economy for decades, Xi has distanced himself from that. So when Beijing sets a priority and offers incentives, manufacturers are going to follow along, whereas a freer market might allocate resources more efficiently or at least differently. So it's probably unfair to judge the outcome. Like we're saying, is it good or is it bad? It's probably somewhere in the middle. But when there is virtually unlimited capacity, as there is manufacturing in China, unlimited capacity, but finite demand, you're going to get a lot of finished products that gather dust. Hence the expediency for exports and invariably the pushback. So with all that being said, we're going to look for some green shoots. And the first is on relationships, Pengguo. I think everybody forgets it was February 2023 when that weather balloon flew across the United States. And that marked the bottom of relationships. There was actually zero communication at that point between the US and China. It's pretty bad. But since then, National Security Advisor Jake Sullivan, Secretary of State Tony Blinken, Treasury Secretary Janet Yellen, Commerce Secretary Gina Raimondo, Ambassador Nick Burns, all have connectivity with China. So I would say all of that is generally positive.
I think right now it's pretty much in a bad relationship. And like you said, U.S. investment in China is completely stopped, as well as China investment in the United States is also completely stopped. And then the reality is, and I think nobody happy about the current situation and the current economy and the current result and relationship. Maybe after some turning point, it's turning back to the positive and again.
Communication is a good sign. I do feel like that is a good sign. But commerce is going to be different. There's no doubt about it. But let's look at some of the numbers that have coming out of China. Industrial profits rose in July, 4.1%, and for the first 6 months, 3.6%, a notch higher than the same period in 2023. But GDP is being cut a little bit. Manufacturing PMI slipped to 49.1 after printing a 49.4 in July. But the Caixin S&P Global Manufacturing PMI, which covers a lot of the smaller export-oriented firms, rose to 50.4, up from 49.8. So a little bit mixed. I wouldn't call that those bad numbers. Doesn't say that they're all clear, but if you're looking for signs of some positivity, the manufacturing numbers are back. Now, as we talk about stocks a lot here, nobody's going to look at China stocks, however you define them, as anything but flat to down this year, down for the year.
I think overall is China really not rely on becomes less dependent on the financial market. So it really depends on the manufacturing business, and also we can see like the manufacturers withdraw from the Vietnam, India. So more and more equipment and companies, they come back to China again because of the strong supply chain and the higher efficiency and the quality. So all those kind of things looks like become the long-term competitive advantage. So and even during the past almost 8 years, and how about the manufacturer in the United States? We can check. So it's really not a good shape.
Yeah, I think the manufacturing piece has the other end of that, which is the export piece, and China is getting a lot of pushback on exports, particularly, we've covered this in the EV space, but we're going to leave it there this week for show C7. Thanks for tuning in, and we'll see you next week.
Thank you.